Did you know that most people think because they have a high FICO score, like a 700 or 750, that it means everything? Think again. It's more about the profile and not solely just the number. To get the best interest rates and loans, it's about the profile, how the profile is built. Hello, fellow entrepreneurs. Welcome back. Lisa here. Listen, if this is your first time here, please don't let it be your last. On the Biznezz Academy, we're about the buzz in the biz. We're your go-to hub for everything credit. That's great credit, business credit, and getting funding after all of this comes together. Listen, don't let this be your last. On this channel, I give you testimony. I share nuggets with you. I do my best to well equip you so you could have the best credit, build a business, build business credit, and get that funding, get the bag. Listen, if you want to be notified every time I go live or upload a new video, go ahead and subscribe to the channel. Simply subscribe to the channel and you'll be notified every time I go live. Get your pen and paper ready and let's go. A 750 FICO score is good. However, it doesn't tell the whole story. In today's video, I am going to share with you the meat and the potatoes that you put with the 750 FICO score, and you'll have a great profile that you'll be able to access all the necessary funds that you need to grow and scale, or to purchase that house, that car, or just simply invest in real estate. Get your pen and paper ready to take note. The first thing you need to know about credit is how you structure your profile. And I am going to delve into all of the key elements that are instrumental to building the best profile so you'll never get turned down again for funding. You guys get your pen and paper ready because this is very, very important. Let's get into it. Number one, payment history. Payment history plays a very significant factor when it comes to credit. It's paying things timely. This is very, very important. You guys, I know things happen, and as they say, lives. But if you have a goal of being able to get a 700 or higher score, and you want credit cards, low interest rate credit cards, you also want to purchase a new car, get a great apartment, get a mortgage loan, or possibly go after business funding, the only way that you're going to be able to get all of these, low interest rate, more business funding, is that you have a perfect payment score, meaning nothing is late. You know, I was speaking to one of my clients the other day that I'm working with to enhance their credit so that they're able to access the funds, the large amount of funding that they need for their shop. As I was explaining the importance of payment history, she has about a 680 credit score. It's not the best, it's not the worst. However, her payment history is not the best. And she was applying for funding to help her marketing with her business. She was actually given a higher interest rate. So what I said to her is, listen, from this day on, let's consistently pay on time, accept the loan at the higher rate. Let's do short term, pay it off, and that will help increase the score, and the payment history will be a little consistent, than what she already has showing. She has, not to go into too many details about my client, but there's a few things that happen throughout life that has affected her payment history, and we're getting her back on track so that once we pay this loan off short term, that when we apply in the future will be able to get better interest rates. Guys, payment history is important, meaning not paying over 30 days late, because the reporting agencies will report late payment if it's past 30 days. I can't stress this enough. Payment on time. What I would suggest is that you pay the bill the day after you receive the invoice. So for example, you receive the invoice on the 15th, a payment is not due until the 30th, pay ASAP. This will help improve your credit profile. Number 2, utilization. Basically what this means is that whatever availability that you have on your card versus the balance that you have. For example, if you have a credit card and the max availability is $1,000 and you've used $500, what that means is that you have used half, 50% of this credit card. And high utilization means high risk. Utilization should be under 10% to get the better interest rates, to get larger amounts of funding, to be offered different products and services that's going to help your business. Listen, you can have a 750 FICO score and have a utilization over 35%. Let me tell you, you will not get that mortgage for that house that you want. You could have a 849 FICO score with a utilization of 40%. You will not have access to more credit. Utilization is so important. So, fun fact. So when I came out of college, before I messed up my credit when I was in my 20s, my credit cards were maxed and I paid everything on time. So when I applied for the car, remember I told you about the hoopty that I got because my credit was messed up, because my utilization was high? I thought, oh yeah, because my credit is really good, that I'll be able to get the car that I want. I was wrong. I end up getting a hoopty with a high interest rate because my utilization was high. That goes as a red flag when your utilization is high. And what that tells the creditors is that you have lots of credit, you can barely pay the credit, and you're paying minimum amounts. So utilization under 10% will help you build that strong profile. So a utilization under 10%, and with that 700 FICO score and that payment history, which is consistent and on time, those are 2 factors that look great and increase your score. Let's get on to number 3, derogatory marks, meaning collections, BKs, bankruptcy, paying late all the time, some of the time. These are all derogatory marks. And I'm telling you, this will definitely hinder you from achieving the 750 FICO score that you are going for. Derogatory marks. I don't have to really go into too many details, but you pretty much know. A mark is a mark. Derogatory means bad, issue, collection, not paying on time, as well as having to file for bankruptcy. You don't want to have these marks on your credit because you will not be able to get the funds that you need at a great interest rate, at the best interest rates, if you have too many derogatory marks. Actually, you don't want to have any derogatory marks. Number 4, age of credit history. You must have a minimum of 5 years of credit history to be able to qualify for larger amounts of funding, as well as achieving 750 FICO score. Now, along with paying on time, having a less than 10% utilization, no derogatory marks, but also having 5 years minimum of credit history with at least 5 to 8, 5 or more Trade line reporting to your credit profile helps build those bones. On to the next. And number 5, make sure that your hard inquiries are under 4, meaning you do not apply, your credit doesn't reflect that you are applying for credit more than 4 times a year. Because when you apply for anything that you have to use your social security number, what that does, it puts an alert up that you are looking for money, you need credit, and the creditors, oftentimes the existing lines of credit and credit card limits are decreased because you are looking thirsty. Oh, I said you were looking. You are coming across as someone who needs money, or you are looking for lines of credit, you're looking for credit, and you're possibly going to claim bankruptcy. So basically, your a red flag goes up, letting the creditors know that you're a possible imposter, so to speak. You know what I mean? Which is really, really important. So fun fact, this goes back to my time where in my 20s and my credit wasn't that great. It was pretty jacked up. This was during the time when I had that car, the high interest rate, the hoopty. I had a lot of hard inquiries because I was hoping to find financing that was at a lower interest rate than the car lot that I initially purchased. And they pulled my credit multiple times. And then also I applied for more credit cards because I was hoping to be able to pull cash off of those credit cards. Let me tell you, I was such a hot commodity of do not trust her, do not give her credit. And this in essence made my credit score just dive deeper than it was. So you guys, do not continue to apply for credit. And make sure that if you are applying for credit, that you do it maybe 6 months apart. So for example, if your credit report is reflecting 3 hard inquiries, you make sure that you wait 6 months to apply for car loan or mortgage loan or whatever it is that you're applying for. And there you have it, guys. I've given you 5 factors that play a role with perfecting your profile. It's not just about the score, it's about how you build your profile. Listen, if you have any questions, suggestions, or any thoughts that you want to share, go ahead and comment below. If you would like to get on the phone with me so I can help you enhance that credit, go from low to high, go ahead and click that button and get on a call with me. And if you're interested in accessing funding, getting some money for your business, go ahead and sign up for a strategy call. And you guys, listen, when you win, I win, and we win together. Until next time, I love you. Go for great. Get that credit good. Get that business good. Get that bag and flip that bag, dude.